What is up, everyone? Roland Wolf here, and we are back. I've been getting a ton of requests lately to get back on this platform and to drop some new trading content. Since it's been about 5 years since my last video, I figured I'd drop in and drop some of the new knowledge I've gained after trading professionally over the better part of the last decade, along with mentoring thousands of students. So let's get right into it with this first tip, which is a juicy one. I believe it's a perspective changer. If you haven't heard of this concept, it might just change your trading forever. And make sure to stick around to the end, because I'm going to be giving away something very special and expensive, just as a thank you to all of you who have stuck around and supported me and the channel throughout the years. So the concept I want to speak about is really important because it really embodies my trading as a whole, really encompasses the spirit of my trading, from how I go about looking at the markets, to the strategies that I've developed over time, to my entries and exits and everything in between. And I also truly believe that this concept dictates and explains a lot of what we see in the markets on a daily basis in terms of which strategies work and which don't. So let's get right into it. That concept is contrarian trading, okay? Contrarian trading. What is contrarian trading? It is the art of thinking for yourself against the crowd, okay? Of thinking for yourself against the crowd. And this works for many reasons, and we'll kind of get into it and even look at some examples of what I mean on actual charts as well, and how I like to go about looking at the charts instead. So contrarian trading, thinking for yourself against the crowd, separating yourself from the sheep, however you want to put it. Most people are followers, okay? We have to talk a little bit of market psychology here to understand this concept. Most people are followers, myself included when I started trading. In other words, we are wired to only buy when we see other people buying strength. In other words, we are wired to only sell once other people start selling. That's the game. Unfortunately, when we start trading, that is how we are wired, and it works against us in every sense of the word. We are always chasing strength. We are always buying high-a-day breaks or breakouts. That's all anyone teaches. Why? Because it's green, human psychology. It's going up, so it's going to keep going up. We're not going to buy something that's going down because logically in our minds, it's going to keep going down, okay? That is how we are wired. And then you have to take that and expand that to the thousands and thousands and thousands of traders all thinking the same way, groupthink, okay? And that is what happens. When we see breakouts, everyone's chasing a breakout, high-a-day breaks. When stocks are spiking, people are chasing. Everyone's buying it, okay? Contrarian trading dictates that when everyone is buying something, it goes down, not up. And if you think about it, it really does make sense from a price action perspective. Take a breakout, for example. If everyone's buying the breakout, who's left to buy it? If everyone's buying a breakout, who's left to buy it? Conversely, if everyone panics, if everyone has sold, who's left to sell? Right? Really powerful concept to understand. Okay? So really, the journey of becoming a contrarian trader is the journey of rewiring our psyche. Rewiring our psyche to not get excited by the crowd, to not be excited by a stock that's spiking, or, if you trade options or crypto, whatever it is that you trade, it's not being excited by the spiking, but understanding that that is where you're supposed to be selling. When a stock is spiking, I am supposed to be selling it. That basic principle alone keeps me so safe, allows me to maximize risk reward. On an intraday basis, it might be 10 minutes of action, it might be 3 days of action, or a week-long swing trade. Whatever it may be, this concept is what keeps me in the right place. So let's go through a chart quickly and just kind of illustrate this concept for you in terms of price action and technical analysis, and how it affects the way I go about looking at risk reward and how I go about taking entries. So this is FRC. Obviously, they've gotten really beaten up. They're kind of the poster child right now for the regional bank crisis. But all of that aside, I am just looking at chart pattern right now and trying to dictate to you exactly how I used to go about thinking about things, where I know retail traders, most retail trader longs are buying it. and how I go about avoiding these areas of conflict that I know people are buying strength and it may be a top. So this is FRC, okay? We get a gap up on FRC from this 13 area to the 15 area, okay? 1550 or so. And we get it opening at 1550. You got a little spike above 16 bucks. And I promise you early on, that is literally what I would do. When this spiked, see the volume here? Big volume. First minute of the day right here. My entry would be undoubtedly right up in this little region right here, okay? Undoubtedly, that's where I would have bought it when I was early on because it's all I knew. Chase the morning spike. That's it. And I would undoubtedly get stopped out here because I cut losses quickly, thank God. You know, through this period of my trading, all I knew was cut losses quickly. I had no idea of what risk reward was. So that's what I did, all right? I chased morning spikes. I cut them quickly. Sometimes they worked, sometimes they didn't. Really just a roll of the dice first minute of the morning. Now what I like to do is let things shake out for 5 to 10 minutes. It's all I need, okay? So in the case of this, I like to see them fade. I like to see them pull, okay? We had a low a day here at 1483 or so. A little bit of a push, all right? That would have been a little sign to me that there's something there. And then another new low here at 1470 or so, okay? And then another push. That to me right here says possibly support here, and that is where I am looking to build risk reward into. And my plan is always going to be with this pattern to sell it into high of day, which is $16. So I frame trades in this way, okay? I'm no longer buying it up here. I'm no longer buying it at 16, 17. I watch the fade, I watch the pull, I watch for a reversal in the mornings after 10 minutes or so. And then I go about framing risk reward based on those levels. So we've got a low a day, if I deem low a day to be 1460 there. And we got a high a day, which is right here around 1615 or so. That is how I go about framing my risk reward, okay? At this point, when I see a new low that barely holds and then perks, I'm thinking possible bear trap here. Then it becomes risk reward, okay? Reward being potentially 16, risk being potentially here in this 1465 level. So I can get it 1480, 1490, 15, and still have great risk reward in terms of my risk reward ratio, if that makes sense. Does that make sense? So if we get my target here up at highs, I'm going to cut at lows. All my goal is in the morning now is to make sure that I am on the right side of this ratio. All right. So here we go. I get 4.73 if I'm taking an entry at 15. I get almost 5 to 1. At 15, I get still 3.5 to 1. You know, the juice is still worth the squeeze, and I am buying at low of day. When everyone is panicking in the morning, everyone who chased the morning spike on big volume are being shaken out, I find risk reward here. If I can get it back to high a day, that's my single, okay? If it goes through high a day, then I'm looking at potentially pre-market highs, which in this case they coincided. But oftentimes pre-market highs will actually be above high of day. That becomes my second target. So that is what I do every morning. I am looking for this single, knowing that all the chasers won't start buying it till right here. Because that's what I used to do. Because that's what we are trained to do. New highs, it's going to go higher. This is where we buy. This is human psychology. This is not being a contrarian. This is doing what everyone else does. Okay, and this is why these areas of charts and breakouts suck so much. I start getting passionate when I start talking about how badly they suck, because it is the only thing people teach are breakouts. It's the only thing people teach. It's all they know. And I don't believe it works that well, you know, especially for new traders or even experienced traders. You know, there are people who are good at trading breakouts. I can trade them, but I can tell you from a psychological standpoint and from this standpoint and the concept of contrarian trading, they don't really fit together. They don't really fit together. So let's take a little bit of a closer look. Here's my risk reward, right? I got great risk reward here. Then we get a high day break. All right. We get a high day break, which would have been my other entry. Back in the day, I may have taken an L here and cut and then re-entered here. This is what I used to do. I was just buying strength. That's all I need to do, and chasing, right? So this entry probably would have ended up being like here because I would have chased it to 1620, 1630. And I would have felt great because you got to halt up. But then you got an immediate up halt and halt down. Okay. And then back through that entry. And then back through high day entry. All right. All my entries, anything through high day. This one's now taken out. This one's now taken out. And I've been shaken out most likely. You know who wasn't shaken out? Me, if I wanted to hold on to it because it never got close to low a day again. Sometimes it does, you know, but in this case it doesn't. So let's look further. Where's the next entry for a noob and for the masses? Well, right here, right? High day. That would have been my other entry. What would have happened? I would have felt good. It halted up and then goes down. And I'd have to cut here or here, right? And if I don't, who knows what's going to happen? So it's one of those games where these entries through high day here, through high day here, okay? This is a high day break. This is a high day break, all right? And this is why you get into these trades and you're immediately down, or you're up for a little bit and then next thing you know, you're down. And if you have issues cutting losses or you don't know where to risk, which is another part of the issue with buying in areas like this, where the hell do I risk? All right, here's the next high day here. You can see resistance. Here's the high day break that I told you I may have bought back in the day. Only for kind of a swift double top 80 cents later and then a huge pull back through this low and through this low. So any of these spots are, from a risk reward standpoint, nothing close to the trades that I get on a daily basis, if that makes sense. So we get another high a day and so on and so forth. I think you get the picture. All right. At some point, it's going to be the last high a day break. And those were all my entries back in the day. I have flipped the paradigm. I have flipped the paradigm completely. All right. With this entry in the morning, I stay safe. With this entry in the morning, I'm able to stay safe. And I'm buying panic and I'm buying support. Same concept goes if I want to play a move, play it later in the move. You know, you got to buy panic. You got to buy, and that's, I'm not saying catch a falling knife. I'm not just randomly buying, but I'm looking at levels that set up throughout the day and then using those to gauge price action. I can tell you, anytime I mess around outside of this area on small cap stocks in the morning, and I start playing these higher lows, the dips, because I'll be playing the dips, if anything, towards support, it's still hit or miss for me, you know? It's still hit or miss. So the longer these moves go, the longer they've been bought and bought and bought, the more sketchy they get to me. And that's all there really is to it. So on any given day, on any chart, I'm always buying weakness. High day breaks, breakouts, any areas like that are the worst, especially because if any of these breakouts get immediately slammed, you're dead topping. You're buying high a day, and they can get slammed really fast before you can even control the trade. So that's the concept. In terms, very basic. There's so much more to it, but I just wanted to get you guys the basic concept, and hopefully, hope that it opens your eyes a bit to the fact that chasing strength, buying breakouts, buying high day breaks, someone smarter's selling it to you. I'm selling it to you. Okay? I'm selling it to you there. Why? Because I try to abide by this contrarian trading concept where I'm buying fear, which means I'm buying weakness, which means I'm buying it a lot of times under VWAP. And all the things I hear from people about buying stocks, in terms of small cap in particular, are all just buy over VWAP and buy breakouts and buy ascending wedge breaks or any sort of breakout is not for me based on contrarian trading. When it's breaking out, I like to sell. And that's what's beautiful about this setup in the mornings is that when I'm catching my reversals in the mornings, I don't have to be right all the time. I can miss a lot of them because my risk is so good and my reward is so good. But when especially if I'm in the groove and they're working really well, Here's the idea. I sell into high of day. And guess where else I sell? Guess where else I sell? I sell here where I used to buy it, out of high of day. All right. It enables me to sell, then hold through pools as I size out. Then guess where else I'm going to sell? I'm going to sell here. Now I'm going to sell here. And I'm going to sell here. My best trades look like this. My best trades have my little arrows where they need to be. And guess where else I'm going to sell? I'm going to sell here, and I'm going to sell into the parabolic. Everywhere that I know retail are buying on big volume, I'm selling it. And there are way more reasons, especially in small cap, that this works, and it's very important. And I'll give you them quickly before we wrap this video up. Short sellers, where do they live? Into resistance, the good ones. Because they are doing exactly the opposite thing that I am doing. They are selling fear. They're doing the same thing I'm doing. They're selling greed. Selling stocks that are spiking. They're short selling it in these areas. That's why they pull in these areas as well, right? And they're covering into these areas at times. But when these fail, they are reshorting it, or some of them short into these levels, okay? So there are short sellers, especially in small cap. There are also going to be institutional investors dumping shares. That's the nature of the game. And if I were an institutional investor with 1 million or 10 million or 20 million shares to dump, where am I going to dump it? I'm going to dump it into the highest volume of the day, which comes where? High day breaks, into strength, into breakouts. So that's why this concept works, okay? I am finding great risk reward. I know that shorts are shorting this thing out the gate in the morning, and they're going to have to cover at some point, and at that point, it may be reversing, and that's what I look for. And I am able to get the maximum possible risk reward. And when most traders get to these stocks that are up 150, 200% on the day, I had an entry near the low of day. And my risk on my trade was at low of day. And if it didn't work, I was safe all day long for the most part. That's the whole point. Even if it doesn't work, I'm okay. All right? And it goes into this whole contrarian trading concept that I'm trying to introduce to some of you who aren't aware of it. It is more of just that, an overarching theme of what I do. Okay? And it's not to say that it's always the answer. You know, you can't just go against the grain. Always. That's not the way. Okay? But if you can combine this idea and these ideas with technical analysis and fundamental analysis, or whatever your markets call for, to really round out the picture and developing a sound process, you're on the right track. You're on the right track. But I promise you, this concept, the psychology behind it, doesn't change. It doesn't change. That's why we get bubbles. Human psychology doesn't change. Human nature doesn't change, which is why the charts don't change that much. And if you can figure out how to mold your psychology, okay, to match that of the charts, then you're in a powerful position as a trader. And that is always the quest that I'm on. Always, always the quest that I'm on. Okay. So hopefully that makes sense to you guys. It will take a little while to get away from the psychological impulses that you guys already have of buying strength all the time, of buying here, of buying here, of buying here. Okay. It takes a while to get used to red feeling like it's good. I like when stocks drop. Like I said, when stocks drop in the morning and I have conviction in them and I'm watching them like a hawk for a bottom, I love nothing more. This trade here, when you start nailing these trades, I promise, come back to me. Come back to this video, please. If you try this strategy, right now it's not working the best the last week or so because the markets have been weak. But when it's working, come back and let me know how it feels, because I can promise you at first it'll be a little weird. You're scared. If you're scared, everyone else is scared. Think about that. And everyone's scared, it's probably going to go up. Just as a basic rule of thumb, right? So using those principles, when you get these entries, first of all, I am not competing for shares with people. I am not competing with shares with people. If I am buying it here, you're not getting filled there. You're getting filled at 16, 20, or 30 on a market order of 40 or 50. Okay? Shorts are being squeezed. They're panicking out. Everyone's buying it. This is everyone buying, which means I need to sell it. Right? That's the whole key to this thing. The whole key to this thing. And then the discipline to make it work. But I promise you, the first one you nail like this, you'll see. It's stress-free. Because I know I can get 5-10 cents risk and I have $1 upside or so. All right? And I just cut if it doesn't go against. If it goes against me, I cut. Okay? Like, say I thought this was the bottom. I would have cut here. But I also would possibly put it back on because I possibly see a bear trap. When I see new lows in the morning. I'm watching them set new lows. I'm watching how far they're going. I'm comparing it to the last new low. Right? That's what I'm doing. But that's the idea there. I'm getting maximum risk reward. And these trades, if I take the single, they're generally a 5 or 10 minute trade in the morning. And I can make them last all day or they can turn into a swing sometimes, just depending on my conviction and whatnot. All right. So that is the concept. That is the concept, the basic concept of contrarian trading, why it's so powerful. It immediately separates you from the sheep. It immediately gets you away from chasing strength. It immediately turns you into a contrarian. It immediately puts you into the flow with the short sellers and the institutional investors. Okay? So be a contrarian. Definitely worth giving it a shot. Like I said, it'll feel awkward at first, but just like anything else, it'll become natural to you to where you can't pull the trigger when something's just spiking because you know that you're not doing what you're supposed to be doing. Hopefully that all made sense to you. I hope I got my point across and was able to illustrate what I'm trying to say. I don't buy strength. I don't buy strength because it goes against the nature of contrarian trading. I don't buy strength because it gives me worse risk reward. I don't buy strength because it's hard to even define risk a lot of the time. I don't buy strength because I'm chasing. I'm not able to get a good position where I want to get it a lot of the time. It's not controlled. It doesn't feel good. I'm buying higher and higher and higher. You know, I'm getting sucked into the crowd as opposed to separating myself. And that is our goal. If you're not profitable, if you're just starting, the main thing you need to do is separate yourself from everyone else watching this video, everyone else getting into trading. And you can do that by looking at it from a way different perspective right off the bat, as opposed to having to rewire yourself. But if you do have to rewire yourself, that's fine. It's doable. I did it. I have students who are doing it. You know, and who are experiencing this amazing phenomenon of finally having trades that don't just go immediately against you and you're down big, of finally having trades where they feel controlled and you know what you're doing from a risk reward perspective. And when everyone else is just figuring out a stock and they're just buying it through high a day, you're taking your profits. I promise you. It feels so good. All right, so that's all I have to say about that for now. Hopefully you got something from it. Hopefully you got a little bit of a change or a shift in perspective. Maybe it'll send you on a better path because the buying strength path is very, very tough, if not impossible. Let's move on. Giveaway. Really, really excited. Every single month, I'm going to be giving some subscriber a sick piece of trading equipment. I remember when I first started, you know, my equipment sucked. The first big screen I got changed my life. Just the real estate, being able to see all the different charts. So for this month, I have a really special giveaway. We're going to be giving away a 49-inch Samsung monitor pictured here. And it should hopefully give you guys real estate. To enter, all you have to do, like the video, be a subscriber, and leave a comment. All you have to do is leave a comment with what you would like to see going forward. My plan is to get multiple YouTube videos to you guys a week, multiple lessons, hopefully, and just keep spreading the information because I've gone through YouTube, I've seen a lot of it, and it's mostly just the same stuff that there was before. Everyone's just kind of recirculating the same common strategies and well-known information. And as I just mentioned throughout this entire video, if everyone's doing it, it's not going to work really well. That's why they don't work. So that's my goal, maybe to get you guys on a different path. So if you like this video, please smash the like button. Please subscribe, hit the bell notification. Make sure you leave a comment as well. And I will be choosing the winner of this giveaway on Sunday of this week. Anyways, thanks for joining me. It's so good to be back with you guys. And I look forward to putting out a bunch more content here in the near future.